Welcome to Awakened Titans podcast with Lily Patrascu, mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services. Discover how to make passive income with multifamily property investing in today's session with Igor Shaltanov. Now, Igor is a former pro athlete and he made the transition from Southern Californian entrepreneurship to multifamily investing. And he started by acquiring single units of real estate and self-managing these properties. However, managing all of these units on his own became burdensome and labor-intensive. So recognizing that this approach was not scalable, he pivoted towards larger apartment buildings with over 100 units. This shift opened up opportunities for retail investors, ultimately leading to the launch of the Avista Fund, which he co-founded with Nikita. So the first question is, what is the secret to your success?
Oh, wow. That's it. Thank you. Thank you for intro, Lily, right? And thank you for having us on the show. That's a great question. And it's hard to answer that question. What is the secret of success? I feel like I'm still building, right, that success, and it's like it's never going to be achieved because it's like a life experience, right, of yourself. But at the same time, there's great things happen, and I think I like some of them more than the others. And the focus, that's one of the probably most important things in my life, would help me and shape me as my development, right? Personal development, business development. So just staying focused and consistent was one thing that's huge, because I see a lot of people around me, right? They just, oh, I like this, I like that, and I want to do this, and I want to do that. So it just spread all over, and it's too wide, too thin, I would say. That's one. And then the ability to not give up, right? And again, maybe it's close to focus, but again, sometimes you face in that one or two challenges and people like, oh, you know what, I'm going to start something new. I was like, why? Because you face just one challenge. It's going to be 20 more right in front of you, but you got to become better. You need to educate yourself. And that was my self-talk, right? And I was going through different courses or entering different communities, right? Talking to different people and saying, how would you deal with that? Yeah. So how would you deal with that challenge? So, and I think that's a huge piece as well. And I think I'm going to stop here. Those two are like a huge in my development.
Thank you. You are currently serving as a limited partner to 3,051 units with a cumulative value of $483 million.
Yep.
What enabled you to become an awakened titan, and how did that contribute towards building such an amazing business?
I think what's enabled me, great question, Lily, as well. There's one thing. Number one, it's just financial education, because I never had an experience of going through financial education, right? I'm talking about my early age, right? And I'm talking about childhood and having that lack or difference or gap, right? I was always trying to just fulfill that gap, right? How can you do better? How can you structure your finance better, right? And beyond working or being an employee, what can you do so your money will be working for you? So, and that was my starting point. And I read the book, and maybe that's another question of yours, right? I read the book. It was the beginning of my self-development, right? And self-realization, right? I read the book of the Robert Kiyosaki, the cash flow Quadrant, which is a very simple book and very easy to understand what he's talking about. And I was like, oh my God. So I was an employee, right, for a long, long time. So, and can I change the quadrant? Can I move to the business owner? I would love to build a business, right? And that was my second step. So my second life, I call it that way sometimes. And I became a business owner, right? And business ownership entails a lot of things. And one of the very important things I feel like for myself was you constantly overcome the challenges, because it's never like nice weather on the business, right? Ownership path. And it's always something. You got to overcome the challenge every single day, right? With that being said, so your brain start to develop the ability to, come up with solution, right? You focus on solution, you're not focused on the problem, you focus on solution all the time. So having that in mind, so having that experience, right, you start to, oh, what's the next stage, right? I've been business owner, what's the next stage? And then you're like, okay, so there's investor quadrant. If you remember that book you read 20 years ago, right? There's another quadrant you can move on, right, too. And I think that was my journey. I said, okay, I love business ownership. It's amazing. So, but what's next? And again, being a business owner and entrepreneur, so you're always wondering what's the next, what's behind that wall? Because everybody stopped, right? And there's a line to that wall, but like entrepreneur will be saying like, what's behind that wall? I'm not interested. I don't want to stay in the line. So I want to go over to the next stage, right? And so becoming the investor, that was a huge development myself. I was like, how actually people do that? So what do they do, right? And I start to research and I start to talk to my mentors. And one of the great quotes I like, and that's the path for the next stage of my life. Like, you can do a lot of different things, but there's a get rich quick scheme, right? So you can just invest and look for, I don't know, Instagram, YouTube channels, right? But there's get rich for sure, and it's a real estate. And my experience was a real estate. It's not the matter of if, it's a matter of just when. Yeah, sometimes it's a little faster, sometimes it takes a generation, maybe 2 generations, but it's for sure. So there's no way you're going to be, I would say, in a worst position, right, financially, 20 years if you invest in real estate. It's like very hard to mess up that thing. So, and I stick to the get rich for sure thing, just very slow, by the way. So, but it's for sure. And that's my mentality. Again, it's not for everybody. So, and that was my next stage, become an investor and becoming, like, again, so the wealthy person through the real estate, because I prove it to myself it works. I was like, oh my goodness, it's working. The capital is growing, right? The equity is growing in your facilities and the buildings, right? And the people love to consume that product. And it's going to be for next 1,000 years, right? There's 2,000 years it was working. Next 2,000 years it's going to work, right? Because nothing was created. We just can't replace the place where we need to leave. And I'll stop here. Thank you for your question, Lily.
Thank you. And which experience awakened your drive to create this property empire?
Experience, and again, the one I tapped into, like always, I want to be more sophisticated than my parents set up, right? That's one. The second one was it's a self-development journey as well. And again, I'm still on the path. I'm not saying I'm there. So I'm still developing myself internally. I'm talking about, so one of the experiences I went to, the Tony Robbins, for example, Unleash the Power Within. So, and it's a huge experience for me because I had that internal ask, I want to change. So, because if you come there and then you have nothing to ask yourself, like it's going to be like worthless, right? You're not going to go to the show. So it's going to be absolutely, a waste of time. I would put it this way, right? But if you have internal strong will to change and you go to his performance or the show, right? And that's what happened with me. So it was a huge experience and turning point for me. So I was like, oh my goodness, I can tap into the potential, right, of something. I didn't know what is that, but I can tap into that. I feel it. I do want it so bad. So my itch was so strong. So that was huge.
Thank you. How can entrepreneurs awaken to their titanic power so they can find the courage, the mindset, the strategy, what they need to build a property empire and create passive income with multifamily investing?
That's a great question. I think my step number one was being aware of what you actually do, because one of the things I see a lot, right, and I was in that position as well. So the people are getting stuck in day-to-day operations. They want to do something, right? Sometimes it's not working, sometimes it's working. They're excited, they just set, but really you're working inside of your business. Like you're getting stuck in the same cycle, so you don't see outside. So, and I feel like for myself, was being aware of what's going on was huge, right? So looking at yourself from outside vision, right? So from outside view, I think that was a great first step. And then the second was you can burn all the cash on development and growing your company, but you can actually, at a certain point of your life, you can actually start to set something separate, which is going to be working absolutely passively without you spending the time, attention, and most important, that energy, right? Because I feel like at the age of, let's say 65, 70, you're not going to have that same level of energy if you have it at 30, right? And I was thinking through the path of how can the money will be employed for me, right? And it's not going to be really dependent on my energy level, on my attention span, right? And stuff like that. So in that, when I start to branch out and I start to explore the world of syndication actually being like truly passive investing, because again, what I see a lot of people say, oh, I'll buy a real estate and I'll start to manage those. And again, you said it in the intro, it's not passive. You can do whatever you want, but if you start to buy a real estate on your own, right, and start to manage that, that's a full-time job. There's nothing but full-time job. On the syndication side, I found like a truly, like, you just give a check to the people, right? And the professionals run that property, and you can chip in into their success. Like, what could be better than that? It was like Rockefeller was saying, I would rather own 1% of somebody else's effort than 100% of my own. And I think that's a very, very powerful quote if you start to think that way, because again, entrepreneurs and again, people, a lot of times they want to control. Like, if I don't control that property, like, why would I invest? But if you put it the other way around, but if you control that property, you spend like 24/7 on managing, thinking, doing that, and you earn like $5 an hour. Like, if you count all of that time you spend in energy, right? What you actually put into that thing. So, but then we have a passive income and you start to tap into your mind, into the passive idea of saying, so I give my money, so which is again another form of energy in my understanding. So you give to somebody, they start to use it for the good cause and the good use, and they start to grow. And all of a sudden you own more of it, right? But you spend nothing, but you took a risk. Yeah, you took a risk, but you spend zero of your energy, attention. So, and I think when you start to tap into that idea, because that's an idea, right? The business is an idea. You do it with your hands, you do it with the employees, right? Hands and stuff like that. That's another idea, but because they stuck in day to day, because the people are in general stuck in their life so much, they don't think about that idea. So how much value you can bring to the world, right, to the market, by actually start to investing passively in different alternatives.
Thank you. Tell us how it works exactly for entrepreneurs who want to make passive income with property and multifamily investing.
Oh, great question. So it works like that. So usually we found like, I'll do the backstory a little bit. So the market was going through the tough cycle of very quick adjusted interest rate, right? And then having that in mind, so a lot of multifamily went through distress periods when they cannot afford to pay that loan anymore. Why? Because their rate was adjusting. So those business owners coming out to market we can't pay that, those deals, like those diamond deals. And then we bring it to our investors. We say, so listen, and that's a real life example. We found a deal in Dallas right now. It was sold in 2022 for $30 million, for example, 2,200 units. And now they sell it for $25 million with a $5 million discount. But not just that. So they put $3.8 million into development of that property. The business, I would say, plan didn't work, but they already spent $3.8 million on improvement. For example, they changed some of the flooring, they changed the windows in the whole building, they painted. So that 3.8 plus $5 million discount will give us immediate, right, security and immediate cushion if something goes wrong. So we bought it at the low base, and then we give that opportunity to our investors, and they saying, okay, we can put in like $100,000. The minimum check is for us $100,000. So everybody collected that money. So to buy that property, we need $11 million in cash. So that $11 million will get collected from the different investors from outside of the world, I would say, right? Because we have some people from France, for example, right? and from Russia. So from different countries, actually, that's another huge potential. You can tap into the U.S. Real estate market, still living in a different country, which is, for me, it's amazing, because now you can actually leverage your local currency, right? Because if your local currency is not strong, you can transfer and fix that in US dollars, and then 5 years after, it's going to be like double, right, in US dollars. That's another huge benefit. Anyway, so I'm going to go back to the idea. So, and then everybody chips in basically at whatever number they comfortable with, but 100,000 is a minimum, and we buy that property. So we start to actually put the sophisticated management, we start to put the books, right, the accounting. So the property management start to do a lot better job than the property management before. Usually it's just execution, and we fire the previous property management company, we put the new one in place, and there is experienced different touch-ups you can do. For example, you can start to split the water and power bill, so you can put a little bit more amenities, right, a little bit more visual appeal. You can paint outside of the property, so it's becoming a lot more I would say attractive, right? And so it's an attractive place to live, and the people willing to pay a little bit more, because again, don't get me wrong, so I would love to pay a little bit more, but it's going to be more security, right, measures on site. It's going to be better property, it's a better response from property management, right? The pool will be clean all the time, the trash cans will be like clean as well, and then timely, right, put out. So those are very, very important things for experience of people living there. And this is exactly what we do when we come in as a new owner operator. So we do those little changes, and because of those changes, people are willing to pay a little bit more, and the rents start to go up, right? So the rents start to go up. The usual prediction, like it's a 2.5 to 3% growth rate for the rental. It's just a normal market rent growth. And 5 years from now, usually you double, maybe a little bit less, but usually you double your money, right? By just investing in that type of investment.
Wow, that is amazing. So how long does it take to see a return on the investor's money typically?
Yeah, great question. So usually there's two ways you can get paid. One is a cash flow, because usually when you enter the project, right, it takes about 6 to 12 months to actually execute the changes. And while you're executing, we don't distribute the cash, because we want to make sure we have reserves. We want to make sure we do like certain improvements and stuff. And we want to make sure we build that safety fund as well if something, God forbid, happen, right? And then after 12 months, you start to receive distributions. The distributions are usually small. It's about 5 to 6%, not more than that. And then you receive it every quarter. So let's say you invested $100,000, you will receive 6%, 5% every quarter. Yearly, I mean, so divided by 4, right? 5% divided by 4, so yearly. And then at the end of the deal, usually it's a 3 to 5 years. I'll probably put more 5 than 3, because some of the projects are longer, some of the projects shorter, but a lot of times it's like a 5 years. And then after 5 years, when the capital event comes, when the actual physical sale comes, that pool of cash will distribute according to your investment. So, and like I said, it usually takes 5 years to get that return.
Thank you. Tell us about 3 case studies that you are most proud of having worked on those particular projects.
Do you want this, or you want the worst ones? Because the worst ones are more powerful, though.
Tell us about the 3 most successful ones first, and then
successful ones,
the ones as well, just to get.
Okay. Yeah, so because I feel like a bragging when you're talking about successful ones. But anyways, so yeah, we bought, there was 48 units, not a huge apartment complex in Virginia, right? And it was out of 48, 20 of them were boarded, and 2 of them were burned almost to the death. So what we did, so we bought the whole thing, and I think within the 8 months, we remodeled all the units. So it took us a little bit of time because there's some issues, right, and delays. but we remodeled the whole thing. And then within the 12 months, instead of 28 units, we put all 48 units on the market because we bought it so cheap because it was distressed, right? So it was like burned and boarded. So the cash flow was minimal. So we bought it very, very cheap, like super cheap basis. So when you go out to the bank and you show them financials and you say we got 95% occupancy, basically there's like 40 plus units already rented to the people. The cash flow is just, you can imagine, like every month the cash flow coming in, people are paying rent. So the bank's saying, oh, wow, you guys did an amazing job. And we say, can we refinance? So we refinance in the bank. So the bank gives us cash. That cash, and that happened like in the month 24, where that cash will be distributed to the people who invested money, not to us, right? So basically, within the 24 months, we returned half of the capital to investors. So let's say if you put 100,000, the 50,000 will be back to you, but you still receive distributions the next month on a full $100,000. Just imagine how powerful is that. And then I think within 2 years, I would say we're going to sell that property. So that was a huge win. So that's one. One other one was we found it was the hotel previous to the COVID-19. So the owners wanted to have they want to sell for 21 million. I'm trying to remember because it was like a while ago. They were trying to sell for $21 million before the COVID hit, though. And then once the COVID hit, you imagine the travel business was a little bit down, right? Nobody was traveling. So they went down to 10% occupancy rate. It was nobody living in the place. And the owners were 89 and 91 years old. They were a little bit older gentlemen. And they said, we want to get out, like whatever. Because you need to understand, you have a big property, it starts to cash drag the opposite direction, right? Just imagine, so you're profitable and then people start to leave. And when you're at 10% and you still need to have an employee, so you're still paying property tax, you're still paying utilities, not as much, but the pool, no matter if you're swimming or not, so it's going to evaporate the water and stuff like that. So you start to accumulate those expenses. That's a lot. So they want to get out. We bought it for 14 million. So from hotel, we redeveloped the whole thing into this single units. Like I would say it's like just a small condo, right, for the workplace, for the workforce, right? And then it's in San Francisco area, which is very, very unaffordable rental, I would say. And people would love to live in a smaller place by themselves and not to pay like a full market rate. And we just start to rent it probably like 6 months ago to the people. And again, that's going to be another super successful venture. And once it's fully occupied, stabilized in a couple of years, just sell it and profit again. Those are the two.
Thank you. And tell us about some of the worst case studies you've had.
The worst ones was, so we were trying to do development as well. And I don't know why, but it never worked out with us. So we bought a piece of land in Texas, and trying to develop that into the 220 units apartment complex, which is senior living, which has senior living aspect on it. And the first thing started, so the rain couldn't get us to break the ground. So it took us like 3 months until it's going to dry out, right? Once we broke the ground, there's a problem with finance. And then once the problem was finance, there's a problem with partnership. So anyway, so the whole thing just broke out. And then we went through the Chapter 11 bankruptcy with that deal. So, and it's still right now in not a good condition. But again, so it just, the problem and the lesson we learned, it's a ground out development, and you never know how it's going to go, how it's going to finish, because it's not constructed yet. So you got to break it from the level down all the way to the top. And there's a lot of things could happen. So, and after those couple experiences, we just stick to existing buildings. It's already built. People are in place, right? And all you need to do is just low value add on that property, but not the heavy development. That was one of them.
What are the biggest lessons you've learned when investing in commercial property?
So I think I dropped it. So one of the biggest lessons, it's again, get something tangible so you can touch that. Because again, if you going into the development, it's a plan. It's not, you can't touch it, right? It doesn't exist. Yes, there's more opportunities for sure, but with the opportunity, there's a lot more risk. So, and then we just found our niche is like something existent, something tangible you can touch and then invest. If it doesn't exist, it's very, very hard to come to realize, right? And come to realization of that plan. So
thank you. What are the potential risks for making passive income with property investing, and how do you mitigate those risks?
oh, it's a great question. So there are a lot of different risks. So one of them, so by some reason, I don't know, and it's hard to imagine, but people will lose their job. It's just probably economy downturn. That's the biggest risk. But if we go through that cycle, I think there's a lot of things will be at risk, not just the real estate, but I think that's the biggest one. So when people start to lose the job and they're not paying the rent, that's one risk. The second potential risk is just you're not going to be able to execute the plan. I'm talking about redeveloping and remodeling those units, because usually in the plan you need to remodel at least 30% of the units, and delay on certain things. For example, like a delay of supply, right? The delay of a tile, I don't know, delay of faucets and stuff like that. Those are another risks, right? The property management risk always, because you need to get really, really good property experience. And I would say get once you already tried multiple times. So usually the people who performs, they continue to perform, and people who doesn't perform, they, by some reason, again, they don't perform. So don't expect them to perform. So yeah, the property management risk always. And I think those are the big three, though. The finances as well. But again, we mitigate that by just fixing the rate when we buy it. So we just go into the fixed rate, because we saw some problems on the market when the people go in an adjustable rate. So they do lock it in very, very cheap. But then when adjusting start to happen, you're really in big trouble, because your debt coverage ratio can just change drastically, though.
Thank you. How does multifamily property investing compare in numbers wise with regular property investing, where you would do everything yourself?
That's a good question. I think there's a couple ways to talk about. One is it's a great way to experience and get the experience for yourself. And I think you should have one or two properties to start to realize it's not what you've been sold to, right? Because again, it's a great way to start. But I shared that before. At the same time, the second part of it, if you count the money, right? If you're not on a hyperinflated market, for example, in California, because I'm in California, so you can get away with a lot of things. Why? Because your equity, your price of house, like growing like crazy. And I would put it this way: it used to grow crazy. Now it's not even growing. So, and you can get with a lot of different mistakes. But when you're in a flat market and you made a bad decision about, okay, what contractor is going to be building something, or like we're helping you. So, and now you spend a lot of money on this and that. So, and you leverage your house at a certain percentage, right? You took a bank loan, right, against that. So your profit is very, very minimal. Like there's, I don't know, you probably make, I don't know, let's say if you're really sophisticated, 10% a year. That's a property, right? You bought at the really good basis. You don't sell it within the next 5 years, you're probably making about 10%. So, but then if you count all the work, right, all the work goes into that. Because a lot of times people do not count their own time spent on that project. They say, oh, I invest there, so and I property manage myself, I save a lot of money. I said, yes, but you do work, right? You don't save the money, so you just don't pay to somebody to manage. You pay to yourself, right? Now count your salary, how much you're making. Is $100,000 a year? So we're like $50,000 a year. I mean, how much you making really? So, and if you, every time when you subtract that salary, right, from that investment, so you're barely making something. So you break even a lot of times if you do it yourself. Why? Because again, you need to account to that property. Who is going to be doing this? You're not going to be doing this forever. At a certain point, you're going to give it to the property management, and they will charge you money for that. So, and if you're talking about the passive investment, so averaging between 14 to 17%, right? 14, 18%, I would say. Put it this way. If it's really, really good, you close to 14. Oh, sorry. If it's really, really average, I would say not bad, but average, you close to 14%. If you're really, really good, you're close to 18, could be 20. So during the COVID-19, there was some cases a lot higher. But again, this is not normal market. I'm talking about normal everyday market. So
thank you. How likely is it that investors will lose all their money or a large part of their money? And what measures have you taken to prevent that from happening?
that's a good question. So the number one is where can you get the double-digit return? And that's where you start to compare your risk. So if you go to the public markets, can you get the double-digit return consistently year over year, not like minus 20% this year, plus 7 and 20% next year. So, but then consistently. So that's very hard to find, right, in general. So with that double-digit return, so yes, there is a risk. It's always going to be a risk, right? Because your return is higher. So how likely can you lose it? Maybe like 1 out of 20, like out from nowhere. So probably 1 out of 20 will go not the right way. Can you lose the money? Yes. Can you lose the full principal of your balance? Probably not, because it's real estate, it's tangible. If everything will go wrong, you still have that tangible asset behind that. You can sell it. You might lose, let's say, half of your capital balance, right? But I haven't seen like people like losing the whole thing. Yes, there are some cases when there's like terrible mistake or financing was not properly put together. But yes, there is a possibility. But again, because of that real estate aspect, because it's a lot safer than just any VC or like IT technology deals and, you know, some crazy companies. Yes, you can lose it, but it's not likely you could do that.
Thank you. Which countries do you invest in?
It's just United States. Yeah, we're in the United States.
Thank you. How easy is the paperwork for investors to invest in your multifamily investing projects?
Oh, it's very simple. Yeah. So we have a we have an investment portal. So you go to the portal. Usually the paperwork is under your, you know, signing registration. You can just click. It's right now it's all digital. I think COVID-19 really propel the whole future, right, of the paperless business, and it's super simple in that way.
Wow, I have to say it was a truly fascinating interview, and I really dislike pressing the stop button, but we've come to the end, and I just have one last question, which is, what's your message to entrepreneurs worldwide who want to make passive income with multifamily property investing?
That's a great question, very deep question, by the way. So I think the message is, if you are progressively realizing some idea, I think that's going to be a huge success for yourself, right? And I found it to myself, right? When you have an idea or a business, and doesn't matter how small or big is that. So it's very important to realize that every single day you do something, you're moving towards your goal, right? And you take in those small steps, and it's always going to be success as long as you stick to that, as long as you feel positive every day, right? You take in an action, so you're going to be a successful person. And I think that's my message, right? Get out there, right? And, you know, remember, you have to realize your dreams, realize your plans, and you guys are going to be much better off in the future, right?
Thank you so much. Stay tuned for the next episode. Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential, so you can get paid to be yourself, find true happiness, and manifest anything you desire.